economic world. What are the key issues then that Forex traders must be aware of? Well, that's what we're going to get into today, and hopefully you are still hearing me and seeing me, Marilyn. Do please just pop me another Y in the chat box. That would be great, and we'll just continue. All good. Raymond, brilliant. Many thanks indeed. Superb. Russ Johnson, got you. Right, okay, folks. Well, if you like what you're going to hear from me today, well, you may not like it, but anyway, whichever way, do drop me an email, george@clickevents.co.uk. Join my mailing list, and I'll keep you up to date with what we're doing. The current program, of course, is the Universal Trader. It's based on all of the courses that I've done, full 7 courses, plus twice weekly watch lists on what is actually going on in the market. So let's get the commercial out the way, which we have, and let's just look at what we're talking about here with Putin. Biden and Putin have inverted the world of economics. Things are changing. It seems very much that Ukraine has sacrificed itself. It's sacrificed itself to the god of Western economics. The West, of course, is totally financialized. Every transaction that we make creams off part of that transaction, from bus tickets, train tickets, etc., right the way through to pretty well everything that we do. Every transaction is designed to enrich Wall Street at the expense of middle classes. Right, I'm assuming all is well. I'll get yet another screen saying that I can't be heard, but I'm assuming I can be heard still. So it of course extends right the way through to the World Bank and how the World Bank operates with dollar debt, where they saddle countries up with brilliant. Thanks, Russ. It also extends to how the World Bank saddles countries with US dollar debt in order for those other countries, those smaller countries primarily, to finance their exports of commodities and foodstuff to actually pay for the loans. It's a crazy roundabout system. And of course, the dollar rises on the back of that, and so do their dollar debt repayments. And we've seen that recently with the rise in the US dollar. It's causing emerging markets, those southern countries predominantly, big problems to repay their debt, their debts, and of course we've seen that in what was Ceylon, Sri Lanka. That of course is also part of their own making. They've gone crazy down the route of free money and modern monetary theory. So the net result, though, is that so many of these countries who are stuffed with US dollar debt, and that dollar debt means that they have so much of their export income going off in dollar debt repayments that they've got nothing with which to buy imports, and they've got none of their crops that they're actually growing themselves, because they all must go to export in order to keep the dollars coming in to pay for the debts. So it's a great system for the US. It pays for the world's largest military to force compliance. So, if they don't comply, they end up as Iraq or Libya. Now, the other part of the world is not called the Western world. It's called primarily the Eastern world, the Eastern and Southern world, and the BRICS countries, Brazil, Russia. Ever heard of Russia? India. And then we've got also South Africa. And so we've got the BRICS countries there. And they have over half of the world's population, and they are growing fast economically. And of course, they're starting now to realize that they've got to form their own version of the IMF. And of course, they're all ignoring US demands to sanction Russia. Now, Biden wants Russia clearly to submit to being financialized. He wants Putin out the way so that he can put another Yeltsin-type puppet in. And the big question is, can that actually happen if the US dollar is collapsing against the strength of the ruble? Well, let's have a chart. And this is the chart of the US dollar against the ruble. Well, what happened? Russia invades Ukraine and the dollar shoots up and the ruble craters. It just collapses. And then, as it became apparent that the Western world were not going to do business with Russia, the sanctions have meant that it's causing Europe a big, big, big problem and the rest of the world. And what do we find? The US dollar is now cratering and has cratered against the US, against the ruble. So there we are. Russia and China have said the Western way of forcing compliance on the rest of the world by the IMF, bribery, etc., regime change, and assassination. Yes, there have been assassinations, invasion, etc., is not going to happen to them. We do not want to join your Western world club. So there we are. Ruble crashed. Sanctions were announced. This was the chart. This is the detailed chart of what actually happened. That was the tumble that we've just looked at, but inverted clearly, and then it went on up. Where did it go? It formed a lovely little triangular wedge. The wedge broke out, and look at this, a massive uptrend, a massive uptrend. Now, I don't know where it's going to go. None of us know exactly where it's going to go or what the outcome, the near-term outcome is going to be. But looking at this chart, it could go two ways. Yes, the ruble just might continue its uptrend against the US dollar, but it might start cratering itself. And this pattern that we're looking at, I reckon all of you guys out there know exactly what this is. Of course, it's a head and shoulders. We've got the left shoulder, we've got a head, we've got the right shoulder that could be in the making. So unless this goes to a new high and does it fairly rapidly, it's in danger of coming back and then breaking the neckline. Now, when that happens, and if it happens, then it could well mean that perhaps the ruble will collapse. So there we are. This is really the only chart we need to know. We just want to ignore all the talking heads, especially ignore all of those news programs and who are supposed news. This is the chart which is going to tell us exactly what is actually happening there in the war. So there we are. World's economic history is at a crossroads. It was at a crossroads back in 1971. A good many of us have lived through a charmed series, a charmed life, if you like, a charmed generation where we've not had any major global strife, or at least it hasn't touched us in the Western world, but it is probably going to do so. So it's at a crossroads. If Putin succeeds, well, it'll go one way. If it goes the other way and Biden succeeds, then it's going to be globalist business as usual. Globalism, of course, is dominated by the US, enforced by NATO, and it will expand throughout the Pacific region, which it's attempting to now, and there's a battle going on with China, and the name of the game from the Western world is contain China, and looking at it from the Chinese point of view, exactly the opposite. So if Russia prevails, Putin stays, US, UK, Europe capitulates, and Ukraine becomes a neutral, independent country. Well, they could have done that right at the beginning of all of this, but the consensus is that Putin must be taken down. So if that were to happen, if Russia does prevail, the US will have a problem. It will no longer have a role as a reserve currency. The rest of the world won't need it. Contracts could then be made in local currencies backed by gold and commodities. And, those countries who've got commodities will be the strongest. World growth will then move from the Western world, and it will move east and south to the BRICS countries, and it will go to the SCO countries, Shanghai Cooperation Organization countries, and they are the ones with the largest world population. So, and if that would happen, then no need to buy US bonds anymore. And of course, that would limit the US ability to print more dollars, and consequently, in time, take decades, of course, the US will be unable to finance their deficits. And of course, the 800 plus military bases in 70 countries across the world, well, some of them are going to have to move to close. And consequently, we are living history right now. This is a terminal fight. Both sides, the US and Russia, are both fighting for their very survival. And the big question is, who will win? Anyway, let's just come back to some reality at the moment. Now, you may look at this and think, what on earth has this got to do with Forex? It's got everything to do with it. This is the US Treasury's yield curve. Yawn, yawn, yawn. Who wants to know about this? Well, what this is telling us, this should normally be a 45-degree angle, meaning that short-term interest rates are lower than longer-term interest rates. That's how the world works. The economic world as we know it works. But look at it. Not only has it gone flat instead of a 45-degree angle, it's tipping down. It's tipping down. And so that's sort of roughly where we are right now. The red line, where we've got longer-term interest rates, are now lower than short-term interest rates. So what's going on? Short-term interest rates are being pushed up. We've just had these interest rate rises from the States, etc., Australia, and what have you, and we've just had Europe announce more than they said they were originally going to do, and so short-term rates are going up, but the long-term rates are not. And what that is telling us is that this massive inflation response by the Fed could well have to be reversed, as this inversion, which has been going on, this inversion started way back in the autumn, in the fall. Recession is inevitable. It is just around the corner. In fact, we're probably in recession right now. So this is the big one. This is the US dollar. It's the DX. It's the futures price of the dollar. And there we are. It's been shooting on up. And as it's been shooting on up, we've had the euro, cable, the Aussie, all of those collapsing as it moved up. And of course, parity, 1-to-1 with the euro, almost 1-to-1 with the Aussie, just about. So is this trend going to continue? It's still going up. The US dollar is still going up, crushing other countries. So the catalyst is going to be, for a reversal here, is going to be the Fed pivot that they're all talking about, from tightening rates, which they are currently doing, and this Wednesday they are going to do it yet again. When that comes to an end, who knows? It might be imminent. We might have to wait until next year for it. If it goes from tightening to easing rates, and if the announcement on Wednesday has words attached to it to say that, yes, we've increased US interest rates, but we're watching it closely. Perhaps we won't go any further. As soon as you get any sort of language like that coming through, then perhaps we're going to get a reversal in this chart. And we will get a reversal here, and that's the big one to look for. So it's only when recession is just too obvious to hide that we'll get the reversal, and then we will get a mother and a father of a new trend. We've done really well on the way up, as we can see here. This is the dollar index. This is where it all started. This is a year ago, 21. We had a beautiful pattern that set itself up. Standard classic reversal pattern that comes out of, comes out of my textbooks. It comes out of my courses, where we've got a higher low and volumes are telling us that we've got a reversal coming up, etc. And we get the breakout move, and we get a pattern prediction of P1 where we expected prices to go, and it went there beautifully, reasonably tidily. Trading volume increased at the reversal, highlighted the up weeks, and so we had a nice little run up to P1. Well, it carried on. It carried on. It said no, 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 we're going on up. Next target was 100. Well, it surpassed 100 quite happily. Notice how the activity index, our proprietary oscillator, then moved above the zero line, and it just tells us what is going on with the trend. When it's below the zero line, it's downtrend. Above it, it's an uptrend. Simple as that. And of course, we had that P1 sort of down here somewhere, but it went on and on and on. So never underestimate a trend. Stay with the trend. Stay with the trend. So it then started to look a little bit mature, and it set up a megaphone. That's a megaphone pattern, a broadening formation. And what you then get is a breakout lower, breakout higher. Could have happened in reverse. And invariably out of that, you get a 5-wave move. It's an Elliott wave expanded flat, essentially, that comes out of a megaphone pattern very, very often. And, you just trade the 5 waves. You think, oh, yeah, 5s, 1, 2, 3, 4, 5. You just trade one after the other. And away it goes. We then get another consolidation and yet another run. So there we are. Quite often leads to a 5-wave pattern. Quite often becomes a reversal. This one just happened to be a continuation. After the second FBR, false break reversal. That's what they are, false breakouts. Trade those all the time. So what have traders got to do? What's their sort of guiding light, if you like? The thing that we should have in mind every single day, something we should, what's the old expression? Put it on the shaving mirror, or for, the ladies, on a vanity mirror. But we need to embed these rules within us. And remember that it's the hyperactive traders. They're the ones, the people who just have to keep pressing the button. I want the satisfaction. Oh, yeah, I've hit the button again. Oh, yeah, made another loss. Oh, let's have another go. Let's do another few trades. They are the ones who lose money. And they are going to pay our wages. After a while, those hyperactive traders start to realize they've got to take their losses rapido. Get a loss, take it. Just take it. Grab it quickly. Because losses result in bigger losses. And of course, big shots, big people, hyperactive traders, they have big egos. Yes, big egos. Oh, I know. I know exactly where the dollar's going to go next. I know what's going. I know what the Fed's going to do. They're going to do this. And of course, the market does not recognize anyone's ego. The markets just don't know that you have to be obeyed, Mr. Ego person. And of course, humble traders will accept they don't know. I don't know, and I'm sure that most of you do not know for sure what is going to happen. But what I do know is that when I see a trend, I want to jump on it. It's like a bus. I want to jump on it if it's going in my direction. Simple as that. So, and this one links, of course, with taking quick losses. How often do we have a nice profitable trade and we think, oh yeah, we'll hang on to it. Oh yeah, it might correct a little bit. And what happens? It corrects and it reverses on us. Never let a profit become a loss. And of course, breakouts are great. They make the most money when they run without looking back, without correcting. So, when they run, we want to be on them. When they correct, we want to be prepared to take a loss. And if we don't, then we're going to be in big trouble unless it resumes. Quite often we get a nice little cup and handle move, and we've got to get used to looking at and for those types of patterns. So, if it falters, price coming back below the breakout candles, most likely an FBR. Get ready to short it. Keep notes every trading day. And this is the big one. Review how you feel. We're in touchy-feely times. And yeah, we got to get in touch with our emotions, because trading is an emotional game. There are times when we do absolutely rubbish trades and we've no idea why it is. And if we can sit back and just analyze it, well, very often it's because we stepped on the cat this morning when we got out of bed and we feel like, or we stepped on a tack or something like that, or you know, our significant other half is saying, haven't you done this yet? You said you were going to do it and you haven't done it. And it's preying on your mind. You don't realize it is. You think, oh, I'll just ignore that. I'll go away and trade. But no, if you're feeling at all on the dicky side, the market will find it out. So what we got to do is just develop a positive expectancy and do it without hubris, without ego getting in the way, and most definitely any touch of arrogance will finish us off in the markets. Anyway, let's look at now the chart. Again, you're saying copper. Copper? No, 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 George, you got it all wrong. We trade Forex. Ah, well, does copper affect the world economy? And does the world economy get reflected in foreign exchange? Of course it does. We are macro traders. Copper is the biggest, most important macro market. So copper, high grade, HG. What do we find? Look, we had a breakout lower. Yeah, take the breakout, fine. But be prepared for the fact that it might come back. And if it comes back, take a partial profits. And we just might take a loss on maybe a third of the trade, but we'll make a profit on 2/3 of it. We get an ABC pattern. Most common pattern in the market. Trade the ABCs. Price came back. It's a false break reversal. And it shot up. That was it. We got a rapid, very rapid, turned actually into a little inverted head and shoulders reversal. It shot up. It shot up. You know, and this thing moves thousands of points when it gets going. It moved on up. So these are weekly charts. These are weekly charts. So there we are. False breakouts work on every time frame you can imagine. And we just run the trend. And of course, you all know how the trend is your friend until, I guess, can somebody put the the last few words into that statement? The trend is your friend until the two more words needed. So we just trade the signals and stay with the trend. And now here we are. It moved on up. It did put in this consolidation, and then it decided that, okay, we'll just move up a little bit more. And as it moved up, what do? We just put a line under the last significant lower high. And if the low of the breakout candle is taken out, then a trend reversal is highly likely. Now, it might happen tomorrow, but it might take weeks for it to happen. And this one didn't take long at all. That little dotted line there, picking out that last high or low before the reversal, false breakout reversal, and wallop, copper crashed. Copper crashed. When it was obvious that the world economy this year was not going great guns, and as soon as the Putin, Biden craziness recession kicked in, it was obvious that there was going to be a major downturn, and we're in it right now. But eventually, we're going to get a reversal. We've had a reversal. It's moved into a downtrend. It is consolidating right now, but a reversal to come back up is on the cards. It's going to happen. So my thing is, join us, grab some of our courses or the entire thing with the Universal Trader, and be ready for the next bull market in commodities. I know you don't believe there's ever going to be another bull market in commodities looking at these charts, but believe you me, they will. So commodities are cratering, so prepare for the next commodities boom. There is always a commodities bull market when inflation takes hold, which will happen again. I missed the word out. Again, when the Fed has to restart QE and the dollar collapses. A good many people don't believe it's ever going to happen, but there we are. Now, that nice dictator man over there in Russia, Putin, has set a floor on physical gold. And he said that he will buy any amount of gold and he will pay a set amount of rubles for it. And of course, oil and gas now being priced in rubles, he has put a floor on the gold price. Now, gold has been collapsing. Silver has been collapsing. Most of the major commodities have been collapsing. But there will be a floor put under them. Putin has done it on gold, and what is going to be the result of this, assuming that he's not nuked, then we will find that we are moving into a very, very interesting era of commodity currencies being king. So at the moment, the West has no choice but to go along with it. Or if, and this is where you need to delve into your history books, what happened towards the end of the Second World War when Japan was on its knees, but it refused to capitulate. It refused to say to the Americans, you've won. They refused. What did the Americans do? You may remember Hiroshima and then Nagasaki. If push comes to shove, could that happen again? So anyway, let's be cheerful for a moment. Let's not think about the end of the world. Let's look for reversals in not only commodities, but the commodity currencies as well. The Australian dollar, commodity currency. My goodness me, are they creaming it with coal? Coal, which just last year, COP26, remember that? My goodness me, there's been a lot of water under the bridge since the Greenies said that's, coal verboten. You cannot use it anymore. Sure enough, it's back to nearly, I think we're around about 27 odd % now of energy throughout the world comes from coal. 27%. Amazing. So anyway, there we are. Canadian dollar, oil producing nation. Norway, Norwegian kroner. Well, again, if ever there's an important commodity currency, this is it. And this is the NOK, US dollar against the NOK. Well, this little pattern, look at this, I've got a number of numbers on here. In fact, what my major process of looking at a market for a potential reversal is to just get a list of evidence. And we've got a list here. Number one, look at this, price goes higher. Number one, the oscillator goes lower. Oh, divergence. We've had divergence suggesting that all of these highs, these last two highs, are on borrowed time. That's that. We then get price action dropping through our main swing trend and color trend indicators. Drops through it. A sell signal. So that was number two. Number three is the fact that the activity index has now decided to drop below the zero line. It started before, of course, just over here, and then it recovered, but it's an indicator that we need to be very cautious that the reversal could be in place. And then we've got number four, and number four is if this dotted line is taken out. We will then be in downtrend territory. And finally, number five is the pattern. It's a wedge. It's a wedge pattern. And that wedge has broken, but we've still got some horizontal support and resistance to clear. Where would you want to take the trade? Well, I want to take the trade when I've got a little bit of fresh air that is likely to be underneath my position. So there we are. The time to take the trade is when we get the signal. We've had the signal. So there we are. Clean breakouts then should always be taken. This is the Jappy, the US dollar against the Japanese yen, a fascinating case study throughout our recent last 40 odd years of economic history that Japan, of course, went through a massive boom and a massive bust. In fact, it was said at one point, the little bit of real estate that the Japanese royal palace was based was sitting on, that little bit of real estate was worth more than Manhattan combined. And of course, they then had a massive bust. And since then, they've been trying desperately to get their economy back on track. And it's like a one-trick pony. They keep buying up bonds. They're buying futures. They're doing everything. They're expanding their balance sheet. Every attempt possible. They've got negative interest rates. And that's really the only trick that they're trying. But things might change. So it kicked off. Well, let's get back to the technicals. We have this superb ascending triangle. We had a breakout, 600 pips in 14 days. When their central bank says they're going to do something, get behind it. Just tag along. It's like jumping on a bus. That's the bus. They were wanting to increase the value of the US dollar and weaken the value of their own. And there we are. It ran on up. It ran up to quite an interesting level into this area. And then what do we find? It sets up yet another pattern. We get another breakout and we get another 400 pips coming out of it. One just follows the other. So it's well known for long, powerful trends, and it has been throughout its last few decades of history. And of course, we then get these long consolidations. This, I have to say, I found this the most frustrating time. And do you know, one of the best things we can do as traders, quite often, we should do nothing. Just sit there. Getting frustrated, of course, but when you get frustrated, you must not do anything about it. You've just got to stay cool, calm, and collected and wait. It was a difficult time for traders to do nothing until we had a clear sign that it was moving on up. Well, we got that last year, and we got the breakout, and it was a question of jumping on it. So there we are. The story is we take apart profits, take the next new trade as it's signaled, and it was here this year. So there we are. This all happened, a consolidation throughout May. Again, another frustrating period. What do? You do nothing. You do nothing. With any luck, if you've done it right, you're sitting on some profits from a previous move up. You've taken a trade that's given you the last trend, and you've taken 2/3 profits on that. So you've then got cash, and you've also got a nice healthy amount just sitting there as paper profit. So we then get the breakout. Notice how we get a temporary dip below the zero line, activity index above the line, telling us that this new trend is kicking off. Price goes up above our key indicators, and away we go. We take it and stay with it for another 700 pips. Now, things do not go on forever, and it's entirely possible that right now, I haven't marked this up, but look at the divergence. It goes to a new high. The trend, which was really powerful before, this trend started off powerful, but it's starting to fizzle out. There's a lot of sideways action going on, and we actually haven't got the volumes on here, but the volumes were also telling us that things were popping down. Plus, on the fundamentals, oh, and I'm sure it's got nothing to do with this, but there was an assassination in Japan. Not too much news about it, but dear old Shinzo Abe, or Abe, he was assassinated, supposedly by some crazy nutcase. Oh, isn't that what happened to Kennedy? Wasn't he killed off by some crazy nutcase, or was it the FBI? Oh no, how can I say that? So he was one of the architects behind the weak Japanese yen idea to try and get their economy going. And we're now starting to get nibbling at the edges. I would not be at all surprised that we will start to find noises coming out of Japan that they're going to change that policy. We are getting ready now. Signs are suggesting then the Japanese may reverse this weak yen policy. Join up with us now because we are getting ready for a major reversal. And indeed, it could be underway right now. It could be. Well, we've made a little bit of money out of it so far. So again, I've got the numbers here. Number one, divergence. Big divergence going on. Blimey, I'm telling you how to trade. I should be taking money off you to teach you this. Number two. Oh, look at that. A key reversal day. Key reversal day where price has been sort of popping up and then all of a sudden it reverses, engulfs ABC. We've got an ABC. This may be all there is to it and it might resume its uptrend. But number four is saying take notice because just today, on Friday it came down to the zero line. Today it's just dropped below it. Remains to be seen how it's going to end today. This could be the cusp of a major reversal. So it's not just longer term. You can trade using my method of trading in any time frame you like. And when I'm not out sailing, or even sometimes when I am actually just sat in the boat in a marina somewhere, but I will very often put on a breakfast trade, and a breakfast trade is typically this one. This just picked up during last week. This was the Aussie dollar. We had a nice little signal formed. Notice how this is just following the more or less exactly the self-same rules that I've been talking about throughout here. We get the activity index, turns red, starts to tip over, eventually gets below the zero line, breaks through the price action, breaks through the our key indicators there, and on down it goes for a nice little 30 pip run before price action tells us to take up profits. Simple as that. 30 pips in the space of, a couple of hours or so. Now, at the same time, we had a very clear trade on the Swissy, the US dollar against the Swiss, very often used as a proxy for the dollar index. They don't move perfectly together, but it's quite a useful one to trade. We had a classic ABC pattern. Of course, you can make money trading the C move particularly. We then find that, look at that. Price is moving down, activity index is moving up, divergence, and we got a reversal. It turned out to be an FBR. I'm not going to go through the details on this. My courses will show you in detail exactly how to trade FBRs, and on up it went. Nice little 26 pips. 15-minute candles, again, about an hour and a half or so. There we are. You take it away. Oh, by the way, there's a volume story as well. And we've got a course specifically, two courses, as a matter of fact, all about volume and how volume tells you a fantastic amount about what is actually going on in the markets. So there we are. You can use the universal trader strategies on any time frame. Join us now. Get stuck in with the universal trader, or just part of it. You can buy the whole thing as one lump at a heavily discounted rate. But most people start here with the 20-minute extreme swing trader. That's the one that gives you the activity index, color trend, swing trend. This is software that you can put onto MT4, MetaTrader 4. And of course, if you want to go further, you can just pick up these other courses as you go. And if you want the whole bang shoot, then go for the whole thing. You get access to me. You get a personal trading session as well. Anyway, that's the place to start, the 20-minute extreme swing trader. So head on over to clickevents.co.uk or just drop me an email, get in touch, and let's start talking. Okay, folks. Well, look, Apologies then for, well, whatever happened this morning with getting this thing started. We've got through the technicals at long last, and it's been great to be with you. Many thanks for your comments. I do appreciate it. And hopefully see you again at some point in the near future. Bye for now.